Tagwan everyone and good evening. I hope that I am audible to you all. So let's start the seminar which focuses on the upcoming examination. Here I have chosen a few topics, but you don't need to limit to those topics. So you can ask any question in the syllabus. So I have shared you a document. If you don't have the document, don't worry. We will share it after the seminar. You can listen to the discussion and you will get some insights which will be useful for the upcoming examination. So here I'm going to focus on these accounting standards, LKAS 1, 8, 10 and 37. Now let's move to the LKAS 1. You can have your own note. If you have a piece of paper or a book, please start writing LKAS 1. Only the important points, not the entire accounting standard, but I will be looking at the important points. So Lamai, please write the topic LKAS 1. Lamai, you know that the very first question in the first paper is about the objective of accounting or objective of financial accounting. Mostly objective of accounting and objective of financial accounting, year by year they ask it. So what is objective of accounting? It's bread and butter to you because it is very simple one. You started with that definition. Of course, I'm not that well today, Lamai. I hope that you are audible. You can hear my voice. I am audible enough, right? So objective of accounting is to provide information to stakeholders or interested parties of a business entity to take decisions regarding that business entity. Okay. Objective of accounting is to provide information to stakeholders or interested parties of a business to take decisions regarding that business entity. But what is the objective of financial accounting? I mean the main objective of financial accounting. Now, my financial accounting has been developed to provide information mainly to external parties. Okay. Financial accounting has been developed to provide information to the external parties. So the main objective of financial accounting is to provide information to external parties or external stakeholders of a business entity to take decisions regarding that business. You may write your own note, right? Objective of accounting, provide information to stakeholders. Objective of financial accounting, the main objective, provide information to the external parties. But here, as per LKAS 1 Lamai, objective of financial account, objective of financial statements. By any chance, if you are asked that question in the examination, you have to include three things. Okay, one is the financial position. You provide information about the financial position and then information about the financial performance and about the cash flows. So if you are asked a question in the examination, Lamai, what is the objective of financial statements? It's to provide information to stakeholders of a business entity to take decisions regarding the financial position, financial performance, and the cash flows of a period of an entity. Shall we write it down? Because you know the earlier two, objective of accounting and objective of financial accounting. But you might not know, but you might not remember the objective of financial statements. So write this, Lama. Objective of financial statement. Or if you have this slide, please highlight. Provide information about financial position, financial performance, and cash flows. So if you have this slideshow with you, you may underline or highlight the three key phrases or words: financial position, financial performance, and cash flows. Please write, Laman. Provide information about financial position, financial performance, and cash flows of an entity to users to make decisions. Just write in simple way, to users to make decisions. And Lama, you know the complete set of financial statements. Just to understand, you know there are 5 components at advanced level: statement of financial position, statement of profit or loss and other comprehensive income, statement of changes in equity, statement of cash flows and notes, right? So going forward, now this is important. The total comprehensive income. Normally you get 2 or 3 questions from TCI, total comprehensive income. Now can you remember the statement of profit or loss and other comprehensive income, right? So if I write it here, statement of profit or loss and other comprehensive income. The top item is revenue. You know, revenue consists of sale of goods and rendering of services. You know, SLFRS 15 standard, right? Revenue consists of both sale of goods and rendering of services, right? So you have top of the list revenue, and then you have profit for the period, and then other comprehensive income. Then you get total comprehensive income. Okay, can you write this, Lamai? Might be useful. Statement of profit or loss and other comprehensive income. Now some students ask, can we write these abbreviations in the paper, in the examination? In my view, my idea, yes. Writing this abbreviation doesn't mean that you don't have the required knowledge. You have the required knowledge, but you know you are facing 2 competitions. One is the competition with the knowledge component. The other one is competition with the time management. So when you manage your time, of course, in my perspective, in my idea, you can write abbreviations. Okay? Because if you write it, you know, we know that you know it, right? Write this one. Now, top of the item revenue, I told you revenue may consist of sale of goods and rendering of services. You may write. This may consist sale of goods, rendering of services. Now, as per SLFRS 15. So remember, Lamai, in a company question, you know, the first question in the second paper is a company question. So if you have both sale of goods and rendering of services, service income, you take those 2 items into a note and take the total revenue, take it here. Understood? If you have both sale of goods and service income, take them into a note, separate note for revenue, and take the total of that, take that total here. Got it? So it's clear the bottom item is total comprehensive income. You know that statement of profit or loss and other comprehensive income consists of income and expenses, right? Income and expenses. So you can write this TCI in this way is equal to total income minus total expenses. Total income minus total expenses, just right? TCI is equal to total income minus total expenses. And can you remember the definition of income as per the conceptual framework for financial reporting? Lamai, you should have studied the conceptual framework for financial reporting. The objective of general purpose financial reporting, the qualitative characteristics of financial information, fundamental and enhancing, two fundamental characteristics, relevance and faithful representation, four enhancing characteristics, comparability, verifiability, timeliness, understandability, and then elements of financial statements, and then recognition and measurement of elements of financial statements. I hope that this is not like Greek, right? You should have studied the conceptual framework for financial reporting. You get like one or two questions from the first paper, right? So how do you define the income, Lamai? At grade 12, you learned the definition of income. Simply increase in equity other than from contributions. Income is defined as increase in equity during a period other than the contributions of owners. Okay. Expenses are defined as decrease in equity during a period other than from distributions to owners. Now this is increase in equity, this is decrease in equity. So TCI is Lamai, change in equity during a period other than from contributions of owners and distributions to owners. So how do you define the total comprehensive income? If you want to define it at the examination, change in equity, right? This is change in equity during a period other than from contributions of owners and distributions to owners. Okay. Therefore, if you go to the definition, Lamai, look at it. If you have the slide, you may highlight the change in equity. Change in equity during a period. They say resulting from transactions and other events other than those changes resulting from transactions with owners in their capacity as owners. Lamai, transactions with owners in their capacity as owners mean the contributions of owners and distributions to owners. Then can you write it simply, Lamai? TCI. Can you write it simply? Write your own note. TCI, just write. TCI is the change in equity. TCI is the change in equity. TCI is the change in equity during a period. TCI is the change in equity during a period other than from other than from the contributions of owners and other than from contributions of owners and the distributions to owners. the distributions to owners. All right. And then write the equation lamai. TCI is equal to TCI, one formula, TCI is equal to total income minus total expenses. Just write. TCI is equal to total income minus total expenses. One equation. Of course, there are two equations for TCI. The second one is lamai. Write this as well. TCI is equal to, you can say it consists of profit for the period and OCI. Got it? Therefore, TCI is equal to profit for the period plus other comprehensive income OCI. And as I told you earlier, I always use the abbreviations in English medium because that's one of the advantages that English medium students can get over Sinhala medium students, because there are limited circumstances or situations where Sinhala medium students can use abbreviations, right? TCI is equal to the second formula, profit for the period, simply profit plus OCI. So let's take one sum. I hope that you have written this. Okay, let's take this sum. The following information is relevant for Janu PLC for the year ended 31st March 2025. Sales, cost of sales, administrative and selling expenses, profit on sale of motor vehicle, dividend paid, dividend proposed or declared. Remember, my dividend declared and dividend proposed are same, right? We don't recognize it as a liability asset. It is a non-adjusting event as per case 10. Revaluation deficit of its equipment, revaluation surplus buildings. And when you read the question, don't read the numbers. Just read the descriptions, right? Retained earnings as at 31st March 2024. During the year ended 31st March 2022, a prior year, 110,000 of surplus relating to office equipment had been identified at its first time revaluation. Now, when you are given a question like this, you can summarize it, right? So how? If I go to the first activity, how to summarize? Now, in the current year, just write like this. No, don't write. Only thing is, if you have the slide, don't write. But if you don't have the slide in the printed version, you may write this. If you don't have the slide in printed version, please write this. Current year and a prior year. Okay, we have two assets, office equipment and buildings. Right? So in the paper, this is given, therefore you don't need to write it once again. Now, for example, here these are given, these figures are given, right? So you can consider these are current year figures, and right side you can write the previous year, prior year. Got it? Right. So the values, current year revaluation deficit of his equipment 150. Here 150 deficit. Current year buildings 200 surplus. Now this is given in the question. You can convert the question into your own working, right? Then we can write the prior year result. They say in year 2022, 110 surplus of office equipment had been identified. 110 surplus. Now, when you have two different results, last year surplus, this year deficit, or last year deficit, this year surplus, the reversal happens. The reversal of revaluation, surplus or deficit can happen, right? And then they say during the year, ended 31st March 2024 in the previous year, 130,000 deficit relating to buildings had been identified. Now say 130 deficit. Now by looking at this, for both the asset, there are reversals. For both the assets, there are reversals. Okay. Then they are asking the total income and total expenses, profit and other comprehensive income, and then the total comprehensive income and the retained earnings as at 31st March 2025. So if you are asked a question like this, Lama, you can write the two formulas for TCI. So if I write the first formula, Lama, TCI is equal to total income minus total expenses. One formula. The other formula you can write total comprehensive income is equal to profit for the period plus other comprehensive income. Write it with me. Income minus expenses, profit for the period plus other comprehensive income. Now remember, Lamai, when you calculate the total income and total expenses, the reversal is not applicable. Reversal is not applicable, not relevant. Okay. So let's find the total income and total expenses. Now, if I show you the question once again, sales is an income, cost of sales is the main expense of a riding business, remember, main expense, main operating expense. Administrative and selling expenses, other operating expenses. Profit on sale of motor vehicle and other income, dividend paid, it's a distribution, right? It's a distribution. And proposed dividends, as I told you earlier, are not recognized in financial statements as liability. Revaluation deficit and expense, revaluation surplus and income. So let me take it. You may write the answer later on. Once you get the tutorial, you can check this, right? And also, if you have questions from any lesson, you may ask, right? So sales, a part of income, 1,650. Cost of sales is the main operating expense, 800. Administrative and selling expenses, 275. Profit on sale of motor vehicle, other income, 75. Then dividend paid, it is a distribution, right? Now, in a sole proprietorship or in a partnership, the distributions are drawings made by the owner. But in a company, distributions are the dividend paid, right? Dividend paid. So the common word is distribution, but it is named differently in different business organizations. Sole proprietorships, partnerships, drawings, company, dividend paid. Okay. So dividend paid is a distribution, it's a reduction of equity, not an income or an expense. Then revaluation deficit, always an expense. This is always an expense. As I told you earlier, the reversal doesn't impact on this. And then revaluation surplus is always an income. That's it. You take the total income, total expenses. Here I get 5, 2, 9, 1. 5, 2, 9, 11, 12. Is it? So total comprehensive income is 1,925 minus 1,225. It's 700. Am I correct? Can anyone confirm this, Lamai? If you're working with me. Can you confirm this? Come on, Lamai. Just send me a message. Okay. Thank you. Right. So the next formula, TCI is equal to profit for the period plus OCI. Right? Now, when you calculate the profit, Lamai, you know how to calculate the profit? Uh, Sales 1650 minus cost of sales 800, administrative and administrative and selling expenses 275, this one, and profit on sale of motor vehicle, it is another income 75, and then you take the two assets, revaluation of two assets. Now up to this point, that is clear now. Sales minus cost of sales minus administrative and selling expenses, and then plus other income. But if you take the office equipment, Lamai, you can see previous year surplus 110, this year 150 deficit. So first of all, this deficit should be used to reverse the previously recognized surplus in the place where it was originally recognized. I hope that you have studied all these things, right? So this deficit is greater than this previous surplus. So we can reverse the previous surplus in the place where it was originally recognized. So it was originally recognized in OCI. Therefore, deduct OCI by 110. Right? Deduct OCI by. Okay, I have got a question. I'll answer for that question in a while. Right? Deduct OCI by 110. But the deficit is more than that. Therefore, that excess of the deficit, that is 40, is another expense. Is another expense. Because of that other expense, profit decrease. Therefore, 40 deduct from the profit. Got it? And similarly, buildings. Last year 130 deficit. This year 200 surplus. So first of all, the surplus should be used to reverse the previously recognized deficit in the place it was recognized in the previous year. So first time deficit is recognized as an other expense. So you have to reverse it. Other expense credit, meaning profit increase. So 130 profit increase. Right? But this year surplus is more than that, greater than that. Therefore, the excess of the surplus, that is 70, is recognized in OCI. Now, if you take the totals, here 40 minus, here how much? 1650 minus 800 minus 275 plus 75 minus 40 plus 130. I get 740. Minus 40, you get the profit. 740 OCI minus 40. So result is 700 TCI. So you can see the same answers. Same answers. And I have got a question. Isn't dividend paid entered in the statement of changes in equity? Yes. Dividend paid, or else we call it as interim dividends. Dividend paid and interim dividends are same. Should be deducted or subtracted from retained earnings in the statement of changes in equity. Why it is called as distribution? Now my dividend paid is given to the shareholders. So it is a distribution to owners. Distribution is an expense record in TCI. No. My distribution means the amount of the equity given to the owners. You can't say expenses as distributions. I hope that is clear. So likewise, if you have probing questions, you can ask. Accrued dividends, we don't recognize, Lamai. Accrued dividends, proposed dividends, dividends declared, all are same, right? Accrued dividends, proposed dividends, dividends declared, all are same. We don't recognize. Why? They are non-adjusting events as per LKS 10. Non-adjusting events. Okay. And then we want to calculate the retained earnings. I'll do it here. Part 3. Now we know the total income, total expense, profit, OCI, TCI. Everything is here. Then retained earnings. You know the composition of retained earnings, Laman. It has a beginning balance. Balance as at 31st March 2024, 1,450. Now remember this breakup, Lamai. This is very much important because this may be important for cash flow statement, ratio analysis, and for some short questions in the first paper. So this breakup, I mean the composition of retained earnings is very important, right? Composition of the retained earnings. Brought forward or beginning balance, and this will be increased because of the profit for the period. Profit for the period is 740. And this is decreased because of the dividend paid or interim dividend. Dividend paid. That is in the question 105. And there may be transfers to other reserves. There may be capitalization of retained earnings, which is the bonus issue. You should have learned all these things. So if there is a bonus issue, it is called as capitalization of retained earnings. The retained earnings will be decreased, right? In this question, there are no capitalization of retained earnings. Then you can take the ending balance. 1,450 plus 740 minus 105. I get 2,085. 2,085. And remember this, Lamai, because at the examination, this will be tested. And this breakup is also important because mostly, in cash flow statement, ratio analysis, these things will be useful. All right. And then let's come to some general requirements of LKS 1. This might be tested in the MCQs. You know that normally we prepare financial statements on a going concern basis. If you have the slide, just highlight financial statements on a going concern basis, right? That is the underlying assumption of financial statements. Remember, underlying assumption of financial statements. Can you write in that way? Underlying assumption in financial statement. Underlying assumption in financial statements. Underlying assumption in financial statements. Going concern. Now, if you can remember 2024 paper, they tested if there is no going concern. If there is no going concern, it came from the accounting concepts. Basis of preparation of financial statement should be changed. Basis of preparation of financial statement should be changed. For example, if there is no going concern for the business, all assets are classified as current. All liabilities are classified as current. There are no non-current assets. There are no non-current liabilities. So basis of preparation of financial statements is changed if you don't have the going concern, right? That is also an adjusting event as per LKS 10. Remember, as per LKS 10, you should have studied that. So if there is no going concern to the business lamai, the basis of preparation of financial statement should be changed. So accordingly, it's an adjusting event. All right. And next one, except for cash flow information, all other statements are prepared on accrual basis. You know it. Cash flow statement is prepared on cash basis. All other statements, including notes, remember, are prepared on accrual basis. An entity shall not offset asset and liabilities or income and expenses unless required or permitted by an SLFRS. Just see it. An entity cannot offset, cancelled off asset and liabilities or income and expenses unless it is required or permitted by accounting standards. Now tell me the answer for this question, Lamai. If you are getting a question in the examination like this, tell me whether it is true or false. An entity cannot offset asset and liabilities or income and expenses. True or false? An entity cannot offset asset and liabilities or income and expenses. True or false? Just send me your answers. You have to have that critical thinking. An entity cannot offset asset and liabilities or income and expenses. Is that sentence true or false? Quickly. It is false. Why? No, not true. False. Because if it is permitted by accounting standards, it can be. But if it is not permitted by accounting standard, an entity cannot offset asset and liabilities or income and expenses. Now you see the depth of that question. That's what you are required to study. When you study the accounting standards, Lamai, look at the depth. And if you analyze the first paper, just analyze the first paper, not now, later on. In the first paper, Lamai, there may be like 22, 24 theory questions. 22, 24 theory questions in the first paper, particularly from accounting standards. Right? Now, one way of managing your time in the first paper, Lamai, of course, you have to have your own strategies, but one strategy could be, now some students do this. They do like 22 or 24 theory questions first. In the first round, they do theory questions. Now, for these theory questions, if you have a proper understanding, you don't take much time. Maximum 1 minute. Right? Maximum 1 minute. Because these are theory questions. If you know the theory very well, you can answer the question within 1 minute. Right? Then assume that it is 22. Now you have 28 calculation-based questions. In the second round, you can take the remaining 28 calculation-based questions. And assume that in that 28, you could answer 20 questions. Now you know that in the second round, you can take like 3 minutes per question because you have saved 22 minutes in the theory questions. Normally, you know that for a question, Lamai, 2.4 minutes can be taken. How do you calculate that? For the first paper, you get 2 hours. 2 hours are equal to 120 minutes. You get 50 questions. If you divide 120 minutes by 50 questions, you can take 2.4 minutes per question. Did you have that analysis before? Don't do that at the examination, right? You should have done that before the examination. You have 2 hours. uh, meaning 120 minutes. And if you divide that by 50 questions, you can use 2.4 minutes per question. Now for this theory questions 22, if you spend 1 minute, you are saving 1.4 minute per question. Just think like 1 minute per question. Then you have 22 minutes saved. Therefore, for the calculation based questions, you can take like 3 minutes or 3.5 minutes or even 4 minutes, depending on your saving. Right? So 4 minutes is more than enough for a calculation based question. So in the second round, you can do say 20 calculation based questions. And third round, do the remaining 8. First round, 22 theory and save the time. And second round, maybe like 20, 21, 22 calculation based questions, taking some more time. And then lastly, uh, the remaining questions. That's how you should manage your time, right? Of course, this is one of the strategies, but you can have your own strategy. My advice is, Lama, you have a gap between the last examination and the accounting paper, like 7 days gap, 1 week gap, unless you do ICT as a subject, right? If you do business studies and economics, you have 1 week gap. So my advice is, Lamai, if you find any topic difficult to you, assume for example, non-for-profit organizations is difficult to you. So what you can do is, in a side, you keep the theory note. You have your theory note, right? And just read it. You might have highlighted, underlined, and you might have summaries of it. So you study the theory note. And in the theory note, there may be questions. Don't do all the questions. Do couple of questions. Now, when you select a question from that lesson, you select a comprehensive question, full question. And then you take the past papers, right? And take that lesson and do past papers for 10 years. For example, non-for-profit organization, you studied the theory first and did a couple of questions in the theory note. And then you took the past papers and do questions from the same topic for 10 years. Then you will be an expert, right? Then you will be an expert. Then at last, please do papers with the timing. Like morning first paper, evening second paper. Morning first paper, evening second paper, right? With the timing. My advice is, Lamai, do the past papers. Because you may have a lot of papers given by the class teachers and other sirs and madams. But you know that it's important to do the standard papers at last. Most of the cases I have seen that the papers that you are given by classes or the schools are not standard papers. I don't undermine the effort that they take, but you know that advanced level paper is set like in months. So there is a very thorough standardization process, right? So school teachers and sirs don't have that much of time to standardize the paper. Therefore, my advice is to standard papers, past papers with the time, right? Then you will get the confidence. Now, when you do past papers, assume that another topic is difficult to you. For example, ratio analysis. That is not that difficult. Ratio analysis. Then you take the theory note, just read it, do a couple of questions, and do past papers for 10 years. And then you will see a pattern. Then you will see the expectation of the examiner, right? It doesn't matter that you have done that question previously, but still do it. And when you take one question, Lamai, take it as a fresh question, right? So that's how you have to manage the time in the first paper. Okay, we'll talk about the second paper as well. I think that this makes a sense. Then we are talking about general requirements of LKS 1. So what I was telling you, Lamai, an entity can offset an asset or uh, income and expenses if it is permitted by, allowed by an accounting standard. And then entity shall present a complete set of financial statements, at least annually. You saw there are 5 components in the complete set of financial statements. They should be prepared at least annually. An entity shall fairly present its financial position, financial performance and cash flows. Fair presentation, right? And lastly, a statement should be presented in notes stating that the financial statements have been prepared compliant with accounting standards. They have to give a statement saying that they have complied to accounting standards when preparing and presenting financial statements. And also remember, Lamai, each component in the complete set of financial statements should be given the same prominence. Each component should be given same prominence. You can't say statement of profit or loss and other comprehensive income more important than the notes. No. Each component is equally important. So you have to give equal prominence to each component. Remember. Right, that's it. The LKS 1. If you have questions, you can ask. Or else we can get into the LKS 8. Write the topic LKS 8. All right. Now LKS 8 is about accounting policies, changes in accounting estimates and errors. So what are accounting policies, Lamai? Now when you define accounting policies, you have to have 5 words. 5 words. That's how you should study, Lamai. Now particularly when it comes to the business studies, theory subject like business studies, when you study, like, remember the number of components. Likewise, so here, for example, when you define the accounting policies, there are 5 words required. What are the 5 words? Specific principles, conventions, bases, practices, and rules. Have you ever thought of that 5 components when you define the accounting policies? Then if you have thought like there are 5 components in the accounting policies, then it will deposit in your mind. There are 5. Then your thinking process starts, right? Specific principles, bases, conventions, practices, and rules. See, specific principles, bases, conventions, rules, and practices. 5 words. There is no order, but in some cases, there is an order. For example, when you recognize the revenue as per SLFRS 15, you have to use the 5-step model. In that case, there is an order, right? Now I told you in the first slide, Lamai, to recognize the revenue, you have to use the SLFRS 15, revenue from contract with customers. So in that case, you have to use the 5-step model. It has 5 steps. There should be an order. First one, identify the contract with customer, identify the performance obligations in the contract, determine the transaction price, allocate the transaction price between performance obligations, recognize revenue when the performance obligation is satisfied. So there are 5 steps and also there is an order. Now when you study Lamai, think in that way, 5 steps in their order. Then it will deposit in your mind. And when you want to retrieve it at the time of examination, your mind, your thinking process starts. 5 steps in their order. But if you, for example, if you take The definition of accounting policies, I'm just giving the guideline, right? I can't do a lot of things using this time, but I'm providing few guidelines, right? So please apply these guidelines to other subjects and other areas of the same subject as well. See, accounting policies, 5 components, but there is no order. Specific principles, you can say conventions, bases, practices, rules, right? Applied by an entity when preparing and presenting financial statements. Applied by an entity when preparing and presenting financial statements. They are accounting policies. Got it? So as the slide has this definition, I don't ask you to write it, but I'll give 2 examples for accounting policies. Write examples for accounting policies. Write examples for accounting policies. One example for accounting policies, Lamai. As per LKS2, inventory, just write like this, inventory. You can use FIFO method or weighted average cost method to calculate the cost of inventory. To calculate, just write like this, calculate the cost of inventory. That is an accounting policy. One entity can use FIFO, the other entity can use weighted average cost. And you have to be consistent, Lamaya. Once you select one method, be consistent. That is the basic idea in the consistency concept, accounting concept. Once you select an accounting policy, be consistent. Don't change it without having a proper reason, right? Another example is LKAS 16, property, plant and equipment, subsequent measurement. You can use either cost model or revaluation model. And if you can remember the carrying amount under each model, something additional, carrying amount of the asset at the cost model is equal to cost less accumulated depreciation. But here carrying amount is equal to fair value less accumulated depreciation after the revaluation. After the revaluation. Okay, I'm getting a question. Can you tell how to do MCQs within a short time? Is there any shortcuts to use MCQs to do it quickly? It takes long time to do MCQs. Main reason would be lack of proper understanding and the practice. That's why I told you one strategy that you can do is, for example, assume that partnership MCQs you take much time, right? Partnership MCQs you take much time. If you have some doubts in the theory, then take the theory note, look at it once, do a couple of questions, and do past papers for 10 years, right? The same thing I'm repeating. And what you can do additionally, you can measure the time. And there is a golden rule, you might have heard it. What gets measured gets managed. Just write it somewhere. What gets measured gets, just write. What gets measured gets managed. It's a golden rule. Don't forget this during your entire life. Okay, I'll explain the carrying amount once again. What gets measured gets managed. If you measure something, it will be managed. So when you are doing the MCQs for 10 years, you manage your time. Take a watch, and for this question, 2024 question, you took like 5 minutes. Right, don't worry. Do the 2023 paper question. You took like 5 minutes again. 2022, you took like 4.5, then 4 minutes, then 3 minutes. Gradually, it will be decreasing because you will see a pattern, right? So if you measure it, Lamai, you can manage it. Always measure it. And sometimes you might not be able to manage it as a whole. I mean, take the first paper, do it within 2 hours, may not be the case, may not be the way. But if you take particular question or set of questions, do it for 10 years, managing your time, then it will be okay. Definitely you will get the pattern, you will get the theoretical understand plus the practice. Okay, remember this golden rule, Rame. Golden rule. This is not only applicable for advanced level, it is applicable to all of your future endeavors. And if you measure your fairness, you will be a fair person. Okay, I'm getting another question. Can you explain the cost model and revaluation model carrying amounts? Okay, once again, cost model carrying amount is Lamai, cost minus accumulated depreciation. Very simple, cost minus accumulated depreciation. In the revaluation model, assets are revalued at the fair value. So we get the fair value into books. And if you can remember, at the date of revaluation, we transfer or we remove the accumulated depreciation to the relevant asset account. We remove the accumulated depreciation at the date of revaluation. Then what is left in the accumulated depreciation account? The accumulated depreciation after the revaluation. Got it? Got it. So that's why the carrying amount under revaluation model is equal to fair value less accumulated depreciation after the revaluation. Another question. In lease, how to identify which interest would be calculate whether to opening balance or opening balance installment? It is like this, as that question was raised. Always, Lamai, write this formula. Always lease interest is equal beginning balance of the lease liability multiplied by implicit interest rate. Implicit interest rate of the lease. Always this is true. Beginning balance of the lease liability multiplied by implicit interest rate of the lease. Just think the interest rate of the lease. Okay. So Lamai, if you obtain the lease at the beginning of the period, lease liability is recognized at the present value of lease payments. Present value of lease payment, right? So if I just write a lease liability account, lease liability account. Now, if you obtain the lease at the beginning, 1st April 24, on one hand, right of use asset account debit, this account credit, right? If you obtain the lease at the beginning, 1st April 24, right? Then lease interest is, this is the beginning balance, that into say 10% implicit rate, 100. Then when you pay the installment or installment payment, say 250, then you can balance it. 1100, 1100 minus 250, 850. Carry it down, brought forward. This is just a hypothetical example, right? Okay, I'll tell about the initial test run. Now you know that this lease liability ending balance should be categorized or classified into two: current liability and non-current liability. So what is current? Next year capital repayment included in the lease installment. Now next year installment is 250. Next year installment, right? 250. Next year interest is lamai. Next year beginning balance of the lease liability 850. Therefore, 850 into 10%. Because next year beginning balance is 850, that into interest rate. Right? So 250 minus 85, because 815 to 10% 85, you get 165 current liability. Always the beginning balance of the lease liability into lease interest rate is the lease interest for that period. Now this is the second year interest. And if you know the current component, you can take the non-current liability as the balancing figure. How? Total balance is 850. Of that, current liability is 165. Therefore, non-current component is 5, 8, 6. Now you can understand, Lamai, always lease interest is equal to beginning balance of the lease liability multiplied by implicit interest rate of the lease. And if you just write the right of use asset for an example, right of use asset. Now 1st April 2024, liability account credit, right of use account debit, right of use asset account debit. Liability 1000. Okay. Now in addition to that, you may have initial payment. So cash account credit, right of use asset account debit, initial payment. Say 500. In addition to that, you may have initial direct cost incurred by the lessee. Initial direct cost incurred by the lessee, like documentation charges, legal charges incurred by the lessee. Say 50,000. Cash credit, right of use asset debit. So remember, Lamai, initial payment and initial direct cost are debited to the right of use asset, credited to the cash. The present value of lease payments, lease liability credit, asset account debit. Okay. Now if I write the double entries, Lamai, present value of lease payment, initial payment, initial direct cost incurred by lessee. The double entries, Lamai, present value of lease payment, right of use asset account debit, lease liability account credit. Right? This one initial payment, right of use asset account debit, cash credit. Initial direct cost, same, right of use asset account debit, cash credit. Just write it. Remember this because in the company accounting question, there may be some adjustments requiring to correct the error. There may be errors. Okay. Okay. Now, Lamai, I'll go back to the previous one. Now, in this question, how do you write the cash flows? Right? Cash flows. You know cash flow statement? We have operating cash flow, investing cash flow, financing cash flow. Just write operating, investing, and financing. Now, based on my question, now this initial payment and initial direct cost, they are debited to the right of use asset, long-term asset. Therefore, these two are investing cash outflows. Initial payment, sorry, 500 cash outflow. Initial direct cost incurred by the lessee like documentation charges, legal charges. Initial direct cost 50 outflow. The interest payment is normally operating. Interest paid 100 cash outflow. The capital component included in the installment. Now, installment consists of the capital component plus interest. This 250 includes 100 and capital component. That capital component is a financing activity. Settlement of lease liability. Settlement of the liability. How much? Installment is 250. That includes interest of 100. So, settlement of the liability is 150 cash outflow. Okay, next I'll talk about the initial test run of PPE. And before that, Lamai, what happens if the right of use asset or the lease arrangement has been taken at the end of the period? Assume this happens at the end of the period, then it is like this. Now, if I use the same figures, Lamai, right of use asset account and the lease liability, assume you obtain the lease liability on 31st March 25, end of the period. Right of use asset account debit 1000, lease liability credit 1000. 31st March 25. And if it is taken at the end of the period, no interest for the current year, no payment for the current year. Therefore, closing balance is also 1000. Right? But you have the initial payment 500 paid on the last day, cash credit this account debit, and initial direct cost, cash credit this account debit. No interest for the current year, no payment for the current year. And this can be divided into two, current liability and non-current liability. Current is next year installment 250 minus next year interest is 1000 beginning balance next year into lease interest rate. That is 150. So non-current liability, I'm doing it quickly. 1000 current component is 150, therefore 850. Now see the difference. Now in the question, only one difference is there, the lease acquiring or acquisition date. If it is acquired at the end of the period. Very simple. And in this case, no depreciation, isn't it? No depreciation. Why? Acquired asset at the end of the period. No depreciation. Okay, now in the previous case, if it was acquired at the beginning, how do you depreciate the right of use asset? How do you depreciate the right of use asset? Now I'll write it here. In the earlier case, if acquired at the beginning, depreciation. So if I ask a question, Lamai, is the ownership of the asset transferred to the lessee? Is the ownership of the right of use asset transferred to the lessee? Who is lessee? The party who obtains the right of use asset, our company. If the ownership is transferred to the lessee, yes, no. If it is transferred to the lessee, depreciate using useful life. Depreciate based on useful life of the asset. But if the ownership is not transferred to the lessee, depreciate the asset based on depreciate the asset based on lower of useful life and lease term. Remember this. Of course, this summarizes the entire SLFRS 16 leases standard. Now, this is based on your question. One of you asked the question, so that caused me to discuss the entire standard. Now, this is the summary, Lama. If you have this summary, you can take like 5 minutes to recall the entire standard. That's how you should study. So if you have a summary for this one, summary for SLFRS 15, revenue, summary for LKS 1 that we discussed earlier. So within shorter period of time, you can recap the things. Then I'll talk about the initial test run as per LKS 16. Okay. LKS 16 initial test run. I'll take one example, Lamai. Assume you are importing an ice cream making machine. A big machine, right? You are importing an ice cream making machine from China, right? So import cost is, for example, import cost is say 5 million, and the price of the machine is say 10 million. You got a discount of 1 million, right? And once you import this machine, before the commercial production, Lamai, you know the commercial production, right? Before the commercial production, you need to do an initial test run. Otherwise, we don't know what will be the output, right? So if we don't do an initial test run, Lamai, the initial products may be having faults, maybe the different color, different taste, right? So you have to do an initial test run prior to the commercial production. Now for the initial test run, assume that you need to make some ice cream. You have to make some ice cream using the machine. To make ice cream, you need milk, sugar, and other ingredients, say 500,000. Now this is of course direct material. And then direct labor, 200,000. If you have direct other, you can incur it. And then manufacturing overheads, say 50,000. Now these are called as Lamai operating cost. What are operating costs? Direct material, direct labor, direct other, manufacturing overheads. Now operating cost of the initial test run. Operating, please write, cost of the initial test run is 750,000. But at the same time, to get the engineering advice, right, you consulted an external engineer, and for that you paid say 100,000 external engineering fee. Engineering say charge. You consulted an external engineer. For that you paid 100,000. Now this is a directly attributable cost. This is a directly attributable cost. Directly attributable cost. You may write, right? And now think it practically. Don't by heart. Don't just remember it. Think it practically, logical thinking. Now, using the milk, sugar, and other ingredients and the direct labor cost and manufacturing overheads, incurring 750,000 operating cost, you produced say 1,000 ice creams. You know that in a large scale manufacturing, you produce batches. You don't produce one ice cream, right? So these are large scale machines, like what Elephant House, Cargill's use, right? Large scale machines. Now you produce say 1,000 ice creams. Now you can or you may sell these ice creams after the production. Now you have 1,000 ice cream. Right? 1,000 ice cream. Now assume you sold this 1,000 ice cream at 100,000. Now is the case clear? You imported an ice cream making machine from China. The import charges 5 million, price of the machine 10 million, but you got a trade discount from the supplier 1 million, right? And if you have non-refundable taxes, you have to add, right? Refundable taxes don't add. For example, VAT registered business, the VAT paid on the importation of this machine cannot be added. Because for a VAT registered business, VAT paid can be claimed from the government. But if the business is not VAT registered person, you can't get it refunded, right? Therefore, non-refundable taxes should be added here. Just write it. Non-refundable taxes. Say 2 million. Non-refundable taxes. Now, what's the implication of this initial test run? I think the case is clear. You spent 750,000 operating cost. What is operating cost? Direct material, direct labor, manufacturing overhead. An external engineering charge 100,000, which is a directly attributable cost. And you sold the ice cream at 100,000. Now, earlier, Lamai, we were able to add this 750 to the asset. Earlier, 2 years ago, right? We can add this. And we can deduct the sales income from the asset. We can add the operating cost, we can deduct the sales income. Now we can't do that. So you can't add the operating cost. You can't deduct the sales income, right? But still, even though you incur directly attributable cost in the initial test run, that can be added. So this can be added. So engineering charge, 100,000, that is 0.1 in millions. Understood? So even you incur that in the initial test run, that is a directly attributable cost that can be added. So what you can't add, operating cost, direct material, direct labor, manufacturing overhead. Other directly attributable cost, even though you incur that in the initial test run, you can add. Right? Now these two cannot be added. Now what is the treatment for these two? What is the treatment for these two? This one and this one. The treatment for these two, Lamai, assume that you produce a substandard product. You produce a substandard product. I mean not the normal product. Right? So you produced 1000 ice cream, but color was not up to the expectation. It was discolored one because initial test run, right? Now, for example, if you make a meal for the first time, Lamai, you may, produce something different, right? You plan to bake a butter cake, but at last it will be a completely new product. Initial, right? So assume that discolor ice creams were produced, not the standard product, which is a substandard product. Substandard product. Then Lamai, now cost is 750, income is 100, so there is a net loss. Net loss. How much? 750 cost, 100,000 income, net loss is 650. This is normally recognized in other expenses. Normally recognized in other expenses. Net loss. This is other expense. Bit complex, eh? Bit complex. Can't help. My standards are laws. They are laws. They are like laws, right? So you can't change accounting standards, but you have to understand it. What happens, Lama, if the income is 800,000? Income is 800,000, which is greater than the cost, then net profit, which is other income. Normally that doesn't happen if the product is substandard, right? If the sales income is 800,000, it is greater than the cost, so there is a profit, net profit, that is other income. And if you look at 2023 paper, if I am not mistaken, this case was taken to the company accounting adjustment, and there the net loss was recognized in distribution cost. 2023 paper, as I remember, right? Net loss was recognized in distribution cost. The reason is in that question, there was a clause or sentence saying that these products produced in the initial test run were distributed as free samples to customers. Free samples freely given to the customer. Free samples to customers. Distributed to the customers freely. Based on that, the net loss was taken into the distribution cost, right? Unless otherwise said in the question, it is another expense. But if the income is higher than the cost, the net profit, that is other income. I think that is clear. But assume, and the thing that I'm going to tell you now is not tested so far, right? What I'm going to tell you now is not tested so far. The next case. Next one. Now we are producing 1000 ice cream. Now assume that we were able to produce 1000 ice cream as expected. The same color, same flavor, same, the conditions. So we were able to produce 1000 standard or normal products. Standard, now not the substandard, right? Standard products. Then what is the treatment? And remember, this part has not been tested so far, right? If the product is a standard product that you produce in the initial test run, the sales income is revenue. Revenue 100,000, right? This cost is cost of sales. Cost of good sold 700. So you can't take the net amount. You have to recognize the sales separately, recognize the cost under cost of goods sold separately. Got it? A big story, right? So if you can understand this case, everything is here. Okay, there is another question. If it is possible, can you demonstrate a MCQ calculation based question from the past year paper to show how the time should be managed? So let me take one example. Mm. Yeah, I have. So shall we take okay, this one for an example, right? Mm. Yeah, this is from 2021 paper. Let's see how to do this kind of a question. Mangala PLC. Now, when you read the question, Lamai, read it very carefully, right? And try to understand the question at the first instance. Don't try to read the question twice. That's your target, right? So, if I read it, Mangala PLC purchased an office equipment for 500,000 on credit. So, you may underline the word on credit. On credit. So if you miss it, your answer is incorrect. If you read the question twice, the first time reading time is a waste. Right? On credit. If I were you, Lamai, I underline the on credit. On 1st March 2021, again underline. 1st March, beginning of the month, to use for administrative activities. Company paid, you may underline. Now this is paid. 20,000 in cash for the installation of this equipment on 2nd March 2021. A machine was taken on credit, installation charge was paid. Now see how to read it. You might think that you will spend more time. No, conscious reading is the best reading, right? The office equipment loan is payable in 10 equal monthly installments. 10 equal monthly installments. Loan is payable in 10 equal monthly installments. If I were you, I underline that as well. On 31st March 2021, end of the month, first installment of 60,000 was paid, which included an interest of 10,000. Now net effect for the equation as at 31st March 2021. Read the question carefully. Now, if I were you, Lamai, I don't depend on the answer given. I have the confidence with me. So without looking the answers, Lamai, I do it independently, like this. Asset equals liabilities plus equity. I do it independently. I don't look at the answers. I have that confidence about myself. So 500 equipment on credit, asset increase, on credit liability increase. But installation charge 20,000 was paid, cash decrease, asset increase, because installation charge is a directly attributable cost. And then the first installment was paid 60, cash decrease. This includes interest of 10. Interest is an expense, equity decrease. Therefore, loan repayment is 60 minus 10, 50. Then you get the answers. And definitely that answer will be among the answers, right? So I am doing some strategies, Lamai. If I believe myself, if I am confident about myself, I don't take the total of this. I take here minus 10, here 450, summation is asset, no? 440. Got it? So look at that. I didn't spend even 1 minute to do this question. But conscious reading is very important. And don't read the question twice. At the first instance, underline it, understand. Then the answer is 440, 450, and minus 10, fourth one. Answer is 4. Are there any chances in SLFR is newly done after 2024 ARL paper which can testable? Yes, definitely. You will get questions from SLFR 15 and 16. Right? And if I take another one, see this one. Manufacturing part, please study it. The following information has been extracted from the accounting books of Mihirani Bakers for the year ended 31st March 2021. Raw material inventory at the beginning, raw material inventory at the end, raw material purchases, increase in work in progress. Now, when I read, I normally highlight it. Increase in work in progress. Direct labor cost, royalty payment on production units, factory overheads. Work in progress is valued based on the total manufacturing cost, prime cost and total manufacturing cost. When you do this question, Lamai, beginning raw material is stock. You don't need to write these descriptions, Lamai. Another thing, in the first paper, don't, we want only the answer. Therefore, when you do the workings, Lamai, don't do it properly, like wordings and things like that. You don't want. only the answer, right? But for the second paper, some of you do mistakes. You do the workings using the calculator and we can't see the working. Remember, for the second paper, show the workings. Even though you are using the calculator, show the workings. Otherwise, you don't attach the calculator with the answer script, right? You bring the calculator back to your home. Therefore, most of the students, they don't do the workings. They don't write the workings on the paper. They take the answers from the calculator, right? Don't do that for the second paper. First paper, we don't want the, workings. We want only the answer. But I am just writing the wordings just to understand you. But when you do it, don't write like this. Now, beginning inventory 100, inventory purchase 130, ending inventory 70 deduct. Then it is 160, direct material consumed. Correct? Then direct labor cost, I don't write the description. Direct labor cost is 70. Direct other cost, that is royalty paid on production, in this case 30, right? And then we get the prime cost, 260. And then I'm just writing the labels, right? Manufacturing overheads or factory overheads, 35. And remember this relationship. The relationship is, you may write it somewhere, not this one. Change in inventory and cost. Change in inventory and cost. The relationship is negative, inverse. Just write it somewhere. Change in inventory and the cost. Relationship is negative. Okay. Meaning, if the inventory is increased, cost is decreased. If the inventory is decreased, cost is increased. The inverse relationship. For example, see, direct material consumed is 160. So you can take this straight away how direct material purchase 130. Now inventory has been decreased. See, inventory has been decreased. Decrease in inventory by 30 can be added. Decrease, it will increase the cost. 260, sorry, 160. Understand? So always remember, change in inventory and cost has a negative relationship. Now they say increase in work in progress. So if the inventory is increased, cost is decreased. So work in progress, 15 increase means decrease. Then you get the manufacturing cost, 20, 280. Now we are required to answer. Likewise, now before the examination, you plan it. Understood? And particularly for partnerships. For example, partnership, it can be year beginning, admission or retirement. Year end, admission or retirement. Now, if the year, shall I write this in two cases? Year beginning admission or retirement, you have to based on the new agreement. You distribute the profit based on new agreement. New agreement, right? And if the retirement happens at the beginning, you can transfer the current account beginning balance to the capital account, adjust the goodwill, and transfer that balance to the loan account if it is not paid in cash. Then you have to pay interest. Pay interest. Unless otherwise given in the agreement, you have to pay 5% interest based on the 42 section 42 of the partnership ordinance, right? Partnership ordinance, 5% interest based on section 42. Current year profit should be distributed based on new agreement. So you plan it. And the second case, April 24, 31st March 25, the admission or retirement happens at the end. Then you have to distribute the current year profit based on old agreement. Old agreement. Understood? Now, if there is a retirement at the end, you can't transfer the current account's beginning balance to the capital account. First, you distribute the profit based on the old agreement. Then you take the ending balance of the current account, right? And that ending balance of the current account should be transferred to the capital account and then adjust for the goodwill. Then you get the equity at the end. And if it is not paid in cash, transfer that to the loan account, right? Then if the retirement happens at the end of the period, Lamai, no interest for the current year. No interest for the current year. No interest for the current year because retirement happens at the end of the period. So if the retirement happens at the beginning, Lamai, do the retirement adjustment first. If the retirement happens at the end of the period, don't do the retirement adjustment first. Distribute the profit first and then find the current account's ending balance. Right? And another thing, Lamai, if the admission or retirement happens at the beginning, you have to calculate the interest on capital based on the adjusted balance. Here, interest on capital should be calculated based on adjusted balance of the capital account, right? Of the capital account. Adjusted balance, right? Because all the adjustments are done at the beginning. But if the retirement or admission happens at the end of the period, the interest on capital should be calculated based on the beginning balances, not on the adjusted balances. Here, in this case, interest on capital should be calculated based on opening balances. Opening balances of capital account. And this applies to the MCQ questions as well. So if you plan it, Lamai, it doesn't take much time. But if you don't plan, you have to think and you have to read the question again and again. So it will take time. So invest some time for the planning, particularly for the partnership questions. And for another advice, Lamai, for the CVP question like marginal costing, you will be given a case study. Like in the previous year, as I remember, the transportation service from Jaffna to Colombo, Colombo to Jaffna, right? It can be uh, organizing a musical show. It can be holding a get together. So in a case like that, convert that case study based question into basic variables. How? You need to have the selling price, variable cost per unit, total fixed cost, and quantity. Right? When you are given the case study, convert that into basic variables, 4 basic variables. Selling price per unit, variable cost per unit, total fixed cost, and the quantity. Right? And then identify the unit of analysis. Unit. Now, for example, if you are organizing a musical show, the person from the audience is the unit. Then guest, singers, musical band, those people are not the unit. So cost that you incur for the guest, singers, all these are part of fixed cost. Right? Your unit is the audience, people from the audience. Although other people are people, they are not considered as the unit. Right? And if you get a donation or sponsorship, deduct it from the fixed cost. Deduct it from the fixed cost. And when you are given a case study like question, convert that question into 4 basic variables: selling price, variable cost per unit, total fixed cost, quantity. That's how you can reduce the time, Lamai. Of course, you can do the paper within the given time, because paper is set by measuring the time needed for an average student. Therefore, if you are unable to manage your time, that is your weakness. So please use the strategies that I told you, and you may have your own set of strategies. You are different to others. You are unique, and trust on you. Build the confidence in you. Right? For that, Lama, you have to have the very theoretical, very good level of theoretical knowledge. That's why I told you, look at the theory note. All right. So Lamai, I don't take much time because okay, I'm getting one more question, so I will discuss that and end the seminar, because I can't do a miracle using this seminar, Lamai, but I can just give you a guidelines or guidance as to how you should prepare yourself for the examination, right? So can you teach about the accumulated fund and the building account? Right, I'll teach that and end the seminar. For example, Lamai, equity in a non-for-profit organization, equity consists of 2 things. One is accumulated fund. You may write accumulated fund. It consists of brought forward balance and the surplus of the current year. And if it is a deficit, it should be deducted from the brought forward balance. Number 2, other funds like life membership fund and building fund and etc. Right? So these balances consist the equity, remember. Now, if I take one example for this one, assume you received 500,000 to construct a building or to purchase some sport equipment, right? So there is a specific need. So those are called as special donations. Now, assume you received 500,000 to purchase some equipment, right? So receipt and payment account debit 500, equipment fund account credit. right? Receipt and payment account debit, equipment fund account credit. Assume using this fund, you spent 380,000 and using the own cash, spent 100 to purchase equipment at 480. Understood the case? Using this fund, you spent 380 and using your own cash 100 to purchase 480,000 worth equipment. So when you purchase equipment, cash credit 480, equipment account debit 480. Receipt and payment. And if you name the receipt and payment account as cash completely, that is fine, right? Now, my normal treatment is extent of the use of the special donation. Extent of the use of the special donation. Now, from the special donation of 500,000, you spent 380, not the 480, right? 380 is one. This is the extent of the amount spent from the special donation. That should be taken to the income. So when you take that into the income, equipment fund account debit 380, normally it is recognized in income statement, right? Under income, equipment donation, donation for equipment, how much? 380, not 480, right? Because we use 380 from the fund. Got it? The extent of the usage is recognized as income. Now, if you balance the fund account, the credit side 500 minus 380, you have a carried down balance of 120. That should be written here. Let's write it as equipment fund. Equipment fund, the balance is 120. Very simple as that. Okay. So think it logically, Laman. Don't by heart. And if you ask how much is the increase in equity due to this transaction? Increase in equity due to this transaction. Now equity increased by 120 as well as equity increased by 380 because this is an income. If an income increase, surplus increase, that comes here. So because of this transaction, the increase in equity is 120 plus 380, 500. Answer is 500 because this comes here, right? Surplus comes here. Therefore, equity increased by 500 because of this transaction. Right. Hope you have understood the things, but I did not teach Lamai because within this short period you can't teach. But one message that I can leave is build the confidence in you, right? And then work for that. Then it will be an interesting task. This will be a game. So build the confidence, trust in you, right? And remember the golden rule, what gets measured gets managed. So you have to measure yourself, your performance. Then it will be managed. So I hope that the small thing, tiny things that I touch are clear to you. And if you have a confidence built in you, that's the purpose of this seminar. So I hope that everyone will get a very good result. And if you come to the University of Sri Jayawardhanapura, I am in the accounting department in the management faculty. So if you come, please talk to me, that you can say that I was in that seminar. Even though I can't see you in person, uh, then I can see you in person. So wish you all the best for the upcoming examination, Lamai, and do it at your level best. You can fulfill the responsibility towards yourself, towards your parents, and the society at large. Okay, and also after the examination, Lamai, don't stop your education, the formal education. Formal education ends in another 4 5 years, right? That's true that you are learning until you die, but the formal education ends after 4 5 years. So don't stop it, right? You can do parallelly the chartered examinations. I am also a chartered accountant. I have a BSc degree and chartered qualification. So when the practice merge just with the theory, then an expert will be created. So don't waste your time. Start chartered accountancy soon after the advanced level. Then by the time you are recruited to the university, you have the professional qualification at least to a certain extent. Then it will be an added advantage in the university. Okay. Okay, Lamai. So that's the advice that I have to give you. I don't know whether you have got something out of this seminar. I told you that I can't do a miracle in this time, but just gave you the guidance and how to manage your time, and how to build your confidence, build the confidence in you. Right. So let me wish you once again all the very best for the upcoming examination as well as all of your future endeavors. So let me leave and thank you everyone and good night.